What you're looking at right now is Baidu, a $40 billion company moving roughly 15% overnight. For a stock of this size, that kind of move does not happen randomly. And it definitely doesn't happen because retail investors suddenly got excited or something. In this video, I'm gonna explain why this move happened, what likely caused it, and more importantly, how you can identify these types of moves by yourself. On this channel, I focus on macro analysis, specifically how government policy, corporate capital, and institutional positioning move markets. I'm not a day trader and I just don't react to noise. I focus on why price moves, not just that it moved. So let's start with the obvious, first of all. This stock didn't grind up slowly, it simply just repriced. This was a gap style move, which usually means the market adjusted its valuation all at once. Retail doesn't move mega cap ADRs like this. Retail doesn't coordinate volume spikes overnight, positioning or cross market repricing. So, one important thing to note is that markets don't move on news, they move on who acts first on information, and I'm going to be telling you that today. So, why Baidu and why now specifically? Well, this stock sits at the intersection of several macro forces right now. It's about China tech recovery. As we know, China and the US has been going on a almost like a race, yeah, a race for AI development, especially chips. And this specifically is in the sector. It doesn't mean that this is developing chips. I think this is a translating company. But what we need to know is that it's in the same sector. So when government funding or capital moves, it moves through the whole sector, not just one stock, for example. So that's why we're covering this one today. When you explain one, you explain the others as well. So AI and domestic tech prioritization is a thing that China has to look at carefully because they're in a race, and especially right now, there's a big chance for money making moves because, as we know, America has three times bigger capital funds on this sector than China does. On America, it's around 150 billion, and for China, it's around 50 billion. So, what does that tell us now? That tells us that China is likely going to be funding more so that they can win the race. And this is almost guaranteed because China is a big company. I mean a country. They don't just stop this race. They don't just don't give a shit about it. You get what I'm saying? So they eventually have to put more funds or policies to help the sector, which in turn helps these companies and which in turn helps the stocks. So policy pressure has been easing on these. It's also been helping. There's a lot of policy going on in China for these types of stocks. They're going up and they've been under heavy pressure for a long time. So when positioning is this light, even small shifts in policy expectations can cause violent repricing. So, what happens most here isn't the headline, it's the volume. This kind of volume doesn't come from retail, this is institutional capital reallocating. Especially with ADRs, institutions often move first because ADRs react faster than the mainland pricing. So by the time the average person sees a headline explaining the move, the positioning has already happened. So what matters here is to see a headline coming and position yourself before it comes so that when it comes, you eventually profit off it, right? So personally, I don't touch anything unless at least three conditions are present: policy tailwinds, tariffs, bans, etc., corporate or institutional capital. This is what moves price up. Corporates move it the most. Timing and positioning, and this stock basically checked all three boxes. So also timing matters. Even with a perfect thesis, timing matters. If you're early with no catalyst, your money just sits there. Like if you say you saw this and you bought here and then for 10 days nothing happened. So obviously you always have to have your money moving. So I'm not trying to be right tomorrow, I'm trying to be positioned when probability changes, right? So if a probability goes up that the stock is gonna go up and it's in your favor, you should check how to position so that you can benefit off that. So could this move fade? Now, obviously, nothing is guaranteed. Obviously, it can move, but a move like this tells you something important, and that capital made a decision, and price is the information. So the point of this video isn't to say I knew this would happen, it's to show how you can read who is acting and not just what is happening. If you understand how governments, institutions, and corporates move money, price movements like this stop looking random. This wasn't a random spike at all. It was mainly because of the funds that I told you before, that China isn't putting as much in the race as America's, and they eventually will have to, which this sector will benefit heavily on that. So I'll keep breaking these moves down, not daily or not reactively, but when there's something worth explaining. If you're interested in learning why markets move, not just chasing them, you'll probably like what I posted.